I'm here today with Bill Rapp. He's with Medallion. Is it Medallion Loans or
Funds is the proper name.
Medallion Funds? Okay, thank you, Bill, for the correction. Yeah, so Bill is gonna uh, enlighten us and give us some experience about commercial loans and how to qualify for commercial loans when you're a business owner and you're looking for a brick and mortar for your business. So, Bill, if you don't mind, just introduce yourself and tell us a little bit about Medallion.
Sure, sure. So, my name is Bill Rapp. Thanks for having me, Willie. I've been in the lending space since 2002, so going on a little past 20 years now. So, I've seen some ins and outs, and I'm lucky to partner with such a great firm as Medallion Funds. Anthony, the principal of the company, has been in commercial lending for 30, 40 years. So, uh,
Wow.
having both of our experiences together on top of a growing staff that we're having here is we're just really designed to take the heavy lifting out of the way for self-employed people who are trying to buy a building. So.
Good deal. Good deal. Okay, good deal. So, so how does that process work? I mean, you don't have to go from cradle to grave, but just kind of give us, mid-range from start to finish. In general, how does the process
Sure.
work?
Yeah, so I mean, really, it usually starts with a phone call from somebody like yourself or direct from the client itself. And we kind of figure out, what kind of building they're looking for. For owner users, generally, you're already renting a place. So you're already kind of throwing that money away and not getting any principal benefit for yourself. So that's one huge advantage is that you're going to be growing equity and getting tax deductions for your business. But essentially, it works somewhat similar to buying a house, but we look more off of cash flow as opposed to a debt to income ratio like you would for buying a house. Basically, we want to make sure that you have the ability to make mortgage payments, and that's kind of the general concept there. We'll see, once we have the initial conversation, figure out what you guys are looking for. I'll let you know what we need to collect as far as documentation for the business. Cool thing is we do offer bank statement programs as well as tax return programs for people who may or may not write off a lot of income on their tax returns. So that comes in
Okay.
helpful for a lot of self-employed people. But once we have a good understanding of what the cash flow looks like that your business is generating, then we can kind of size your request. And then, really, at the end of the day, you work with your local realtor partner, select the building, make an offer, negotiate just like you would, and we'll get to closing and make sure the funds get exchanged once all the underwriting's done. And generally, in 30 to 60 days, we can turn around and get keys to your new building. So.
Okay. So you said you kind of do your calculation not necessarily by on a debt to income ratio uh, for the business owner, but you're looking more like I guess it would be like we would do a calculation for a DSCR
Very
type of
much like
debt
that. That's
service
exactly
coverage
right.
ratio
Yep.
type loan. So I mean, so how would that look? You mentioned bank statements. So let's say we have a business owner um, that you are looked at in business, self-employed, and all their income is just strictly from their business. So is that where you're looking at the bank statement, or is
Yeah.
it
So
a
bank
combination?
statements, right? Yeah. So bank statements can give you a truer picture of what money's coming in and going out monthly, whereas tax returns you can take advantage of tax code to get deductions for your business, so you don't have to pay as many expenses at the end of the year. So it might not represent the same picture of what the actual cash flow is. So that's kind of why they're useful from that regard. But big thing is we'll see a deposit history, we'll see an expense history, and really what we're looking for is enough money to cover the mortgage payment plus a cushion just over and above that. And they're usually 1.25 or 1.25 DSCR is
Okay.
kind of like the industry standard of what's considered good to approve. Depending on the project, it may go a little higher or a little bit lower.
Okay.
Think about it this way: if you have $1,000 mortgage payment, we want to see you bringing in $1,250 for every 1,000 that we're going to lend you. Is kind of the concept. We just want a 20% cushion over and above. Is kind of how that underwriting process works.
Okay. So when you're looking at my income on a bank statement, are you taking 100% of what I'm making in the business deposit, or is there some other type of calculation that you're going to consider?
So yeah, we would take 100% of the deposit revenue, and I've done some time in residential lending where they kind of have expense ratios that you kind of have to back out, and that's not something that's going to apply in the commercial realm.
Okay.
So yeah, we would use your full deposit history.
Okay, so you're saying, and that's what I was leading into because of looking at some bank statement loans, there is an expense ratio that they take into consideration where they will only use maybe on average 50 to 75% of that income, depending on what's going out the business.
Right.
So, and you guys
So
don't consider that.
Correct. It's separate from that. Now, somewhat in the same vein, when we're dealing with a rental property that say brings in 10 grand a month, we're going to
Okay.
look at the expenses that come along with that. So generally, it's about 40% is a good base number for what we use. So we use 60% of the income is kind of how that goes to cover taxes, insurance, any common area maintenances, and then if you have to pay expenses like water or
Hmm.
utilities or anything like that. So that does pop up in a different segment, but to answer your question, no, we don't.
Okay, good deal. So with that being said, what type of loan to value ratio would a person qualify for,
So
or
that's a good question. On our self-employed bank statement program, the maximum we can do is 20% down.
okay,
With the SBA, which will require you to qualify off of tax returns, we can do as little as 10% down. So that's helpful for some people who fit the mold for that product. But if you want to use bank statements, we just need a little bit more cash in the picture. So.
okay. So you mentioned that SBA. What's the difference between doing commercial SBA and your regular bank statement? Is that considered conventional?
It would be considered conventional, yeah, yeah. It's kind of how that is. So SBA is Small Business Administration. It's a government-backed program, and the difference between the two, well, one is they qualify of tax return income, and B, they're going to have guarantee fees, and our pricing on our conventional program, even with bank statements, is probably going to be better than where the SBA is at nowadays. Not to mention, we can save you on the upfront fees that they're going to charge you. So a lot of times, borrowers will actually opt for our conventional program instead of going with the government route. But those are just some key differences right there.
Okay. So you say so. I'm going to touch on the SBA. You said the fees. What are those fees as far as like a percent wise? What does that usually look like?
Right. So it's a sliding scale is the answer to your question, but I know that whenever your balance goes over $1 million, yeah, you have a 3.5% funding fee. So I mean, on $1 million, you're already looking at quite a substantial chunk of change right there.
Okay.
Yeah, but really, what we can serve is what we can offer is basically we don't charge those fees, and our pricing is going to be a little bit better. So when you look at apples to apples, we can always get you quotes on both and present them to the client and let them know which way they want to head. But I think more often than not, people recognize where they're saving money. You know.
Okay. Okay. So question in my head is, so on a commercial loan compared to like a regular residential loan, right? And you're looking at commercial property. Um, how are you guys handling the servicing? So because unlike residential, you eventually that service is gonna be sold to Fannie or Freddie. On the commercial side, I mean, are you guys handling that in house, or is that something that you may be selling off to maybe some venture, some other investors or something like that?
So yeah, generally we function both as a mortgage bank and well as mortgage brokers as well.
Okay.
So even when we fund in house, we don't have any desire to be holding the paper. Much like a lot of aggregators do, they're going to end up selling it to Fannie Mae. In commercial world, there isn't a an agency like that kind of buys the paper. But we do have larger banks that basically fill the gap from that concern. So there's just a number of people out there. Bayview is a big servicing company out there that a lot of commercial paper ends up with. So
Okay.
just
So
for
they
instance, I'll throw a name out there. Yeah.
okay. So how much where are you looking at as far as the individual credit for, you looking at are you looking at the business credit or are you looking at the personal assets and personal character of the
Gotcha.
business owner?
That's a common question. So we will look at the personal credit for the guarantor of the business, which is usually whoever's the face of the business. We do want to see 650 or better as far as credit scores. I do have programs who could allow and accommodate for less than that. But obviously, the better your credit score is, the better the pricing is going to be on your terms. It's kind of that's the trade off there. We do report to the EIN's credit if we record in an entity. So we would just need to get, the formation certificate, the operating agreement, and the EIN number, so that way we can make sure we're reporting properly. Jamie Gamboa. But yeah, so essentially that's kind of how that works.
Okay, you said the EIN and the how the business is structured. So when you're looking at personal income, let's say if it's a LLC with a couple members. Is that just the I guess the managing member that you're looking at, or is it everybody that's on in the organization
So it
that
can
has a
vary,
seat?
right? And that's a good question. It varies a lot with the entity structure. Is basically how to do so. How do I need to respond to that? Excuse me. Typically, you have one or two members that will pop up and be the face for the loan. More often than not, it's one. Um, and as long as their operating agreement gives that person power to do so, then we're fine. And if we have to get the operating agreement amended in the loan underwriting process to allow that, that also works as well. But generally, anybody who owns more than 25% of the business would be somebody that would think about being on the application for a business.
Okay.
So that's a good kind of numbers rule for you right there.
Okay. So it depends on what percentage of the business that
Right.
they
Yeah.
own.
The bigger the
Okay.
percentage, the more likely it's going to be them. You know what I mean?
Okay. Good deal. Okay. So my next question, what type of buildings would you guys finance or will invest in? Because I know we had a file that we were working on, and I think we're kind of. I'm not sure where she is on that file. It was a doozy.
Yeah. Yeah. Yeah.
uh,
I feel for
and
her. Yeah. It's
yeah,
too many twists and turns. Yeah.
right. Because this person has a pet, and Bill, he's talked to her, and I'm just gonna lay this down for the audience. This person has a passion for what she does, but the particular building that she was trying to secure was an old church, and she's trying to turn that into an event center. So, kind of, Bill, can you kind of break that down for me?
Sure.
Why that would or wouldn't work for a particular investment?
So yeah, and unfortunately, with churches, that is one specific segment of the commercial world that is a little bit harder to work with. Now, we do have church lenders who work strictly with churches, but in this particular instance, she was trying to buy a church, convert it to another use, and the fact that it still had signage up as a church, it kind of just made it more difficult, and we couldn't find investors to purchase the loan, or at least not at the down payment that she was hoping for. It was really kind of the issue, I think, is really at the end of the day what happened on that one. But yeah, I mean, with respect to that, churches are kind of their own little animal. But we do lend to churches too. So, but outside of that, I mean, we look for lend to apartment buildings, office buildings, retail structures, mom and pop gas stations, even branded gas stations with big Exxon flags,
Yeah.
hotels, motels. So I mean, there's it's when you get very unique with the commercial property type, it kind of limits the financing types that are available to it as well. So the more standard the property type is, like office building, retail, apartment, those are kind of your bread and butter, where those are very readily and easily financeable.
Okay. Good deal. Good deal. So, you kind of touched on fees a little bit. Can you let the audience know what are they looking at as far as upfront fees, as far as, maybe, okay, you gotta get the appraisal done. Are there any down payments? Just kind of throw any,
Sure.
the usual
Yeah,
out
yeah.
there.
So the first thing you probably need to be prepared for is a credit report fee. We have to, have a credit report to look and see where you're at. Once we have identified a property, we've kind of started negotiating with the lender. They'll produce what's called a letter of intent, which is basically they're saying we're interested in this property, we're interested in financing it. They'll give you an idea of what the terms will look like. And at that case, at that point in time, generally there's a fee or expense deposit, which generally gets credited towards your appraisal and or your environmental inspections as necessary. More often than not, environmentals may not be necessary. When you deal with oil and gas properties, that's where they become much more expensive as well as required. When
Okay.
there's hazardous materials on site, and that's generally when those come up. But generally, you'll have to worry about an appraisal and your credit report up front. And then whenever we go to closing is kind of when the balance of your down payment monies are due.
Okay. Okay. Good deal. Good. Okay. So, I had another question in my head. It'll come back to me. Um, man, so the underwriting compared to commercial, comparing that to residential, is it pretty much around the same as far as how it is underwritten, or there's some caveats?
Yeah, so they have different issues that they are much more careful to watch out for. The big thing is that they want to look for clouds with any kind of entity structure that'll be proposed. So one of the very first things we do when we submit a loan is we will research the entity to make sure that there are any potential judgments, lawsuits, anything like that. So that's one place that's a little more sticky that you wouldn't hear about in a comparable way in a residential type transaction. But outside of that, I mean, really it comes down to the valuation of the property. Generally, appraisals are something that get looked at pretty carefully. And then the title work, of course, we got to make sure everything's recorded, proper names. But as far as comparison between the two types of products, I would think that
Totally
those
different.
are essentially treated
Yeah.
the same way. So,
Okay.
yep.
Okay. So let's just say, business owner, let's say I have a food truck and I want to go ahead and get a brick and mortar restaurant. Looking at a space, but it needs some work.
Okay.
Can that repair renovation be included within the loan?
It can. We want to make sure that the property size is big enough. That's probably the number one problem because that kind of request needs to go SBA. Is kind of how that'll be funded.
Okay.
Generally, SBA likes to see a minimum loan of at least 500 grand north of there. But as long as we can get something decent there, we can roll in money for, let's say, like a commercial kitchen build out, as well as working capital into an SBA loan to help that. So basically, the way that that's structured is they're going to do the purchase price plus any construction renovation, any working capital, and then you'll have one bigger loan as far as whenever you go to closing and sign is how that would work. So
Okay. Okay. So let's say, okay, I found a building. Let's say the space that I want to use is only 30%, 40, maybe 50% of the use of that building. And I say, okay, well, that may be an investment opportunity for me to actually be a commercial landlord. I can lease the rest of that building, that space out to another business owner. Is that possible?
So yes, it is possible. That would not be possible for an SBA transaction. They have a specific requirement that you have to have more than half of space. So you got to have at least 51% of the space
Okay.
to qualify for an SBA transaction. But as far as for our conventional project, we're okay with that as long as you can qualify to purchase the whole building for yourself as an individual. If you want to turn around and sublet it or rent it out after the fact, after it closes, that's not an issue.
Okay. Okay. So my last question is, since we kind of touched on it, we kind of lead into most of the information is kind of geared towards SBA. Um, do I have to have a SBA certification like a 8A or something like that to qualify?
So that your certification, no, but the two most common programs that you're referring to are the 7A, like you mentioned, and there's also a 504 CDC round,
Hmm.
which is somewhat similar to an 80/20, but it's actually more like a 65/25. Yeah, that's right. And then you put down the remaining 10,
Okay.
is kind of how that works. That's just the way they structure their deals. It's a little bit different. But yeah, so it is possible to obtain maximum financing through both of those SBA products.
Okay. And you said certification is or is not required? I want
It's
to
not
be clear.
required for an
Okay.
individual. It's more of a requirement for the bank that has to obtain it. Kind of like on the residential lending side, you'd have to have an FHA approval to be able to do FHA loans. They have to have an SBA approval to do SBA loans. Is kind of how that
Okay.
works.
Kind of how that works. Okay. Well, I think that was the last of my questions. Is there any more information that that you think would be useful to the public and before they begin their process to
Sure,
apply for
sure.
a commercial loan?
Yeah. Well, yeah, I'll give you a few little tidbits on some things that we do that might help your community as well. So, for instance, at
And I'm
beginning,
sorry, I didn't mean to. I did that other question did come back to me.
okay,
Can I touch base on that
go
real
ahead,
quick before you
shoot
go
it,
into your
go for it, go for it.
final thought? Uh, I know you said it depends on the type of loan and each individual loan as far as the documentation that you need. But can you give me like a general idea of what type of documents should I have prepared, ready to go? I
Sure.
need business plan. Uh, you know, what 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 are
Yeah.
the
So,
documents most
for
common?
for any SBA request, you do want to have a business plan. We're going to want to see 2 years of financials, 2 months of bank statements, two forms of ID. Those are just a general rule for an SBA. If you're buying a piece of investment real estate, we're going to want to look at the rent rolls for the property. Uh, we need to figure out the expenses. So, like, what are the insurance costs? What are the tax costs? Are there any maintenance costs that come along with it? And if you have that information ready to go, that'll help us speed along. A lot of these things, I have little forms that can be filled out pretty quickly and easily to help get us from point A to point B. But if you have your financial readiness package of two forms of ID, 2 years tax returns, and two
Hmm.
months of bank statements, that's a good starting point right there.
Okay. What about any, let's say, is this okay for new business owners? Let's say I'm just, I have a passion for something. I'm starting out. The numbers look good. I project pretty well, but you never. This is my first time out the park.
Sure. So we do allow for startups under a few conditions. And the answer is yes and no, is the answer to your question. It's
Okay.
easier to get a business loan if you've been in business at least 2 years. Not to
Okay.
say it's impossible. That if to make it possible, we want to see at least a 20% down payment on an SBA transaction. We will be able to use projections with them so that way we can forecast your income. They do want cash reserves, so money set aside in the bank over and above what you need for your closing costs. And as well, they like so generally if the borrowers are married or if they're just two individuals, we'd like to see one with an income, one managing the business, so that one's income could offset the business payments if needed to move forward. Those are
Okay.
really the three conditions we need to see to get a startup finance. So it's just a little bit more. They ask more questions for those.
So will both of those people need to be on the loan? Let's say, like you just mentioned, there's a spouse that's a wage earner. If you're taking into to consideration their income, would they have to be on the loan?
Not necessarily, no, but more often than not, that is usually how that happens. Yeah.
Okay. Okay. So let me go back to you. I'm sorry to interrupt you.
Oh, sure.
Uh, any tips to consider before you even knock on the lender's door?
Sure. Well, I mean, outside of that, I mean, really just having a clear idea of where what you want having if your financial readiness package, those tax returns, bank statements, that's a good idea. And any questions, if you've had the time to think about it, write it down ahead of time because I know this happens to me in just about everything I do. If I don't write it down, I'm gonna forget. It's just the way that works. I don't know.
Right.
I'm old, I guess. I don't know, but anyway, that's a helpful tip. But outside of that, so things that we do that might also help you in your community. We do cash out loans for businesses that need to meet payroll and things like that. We do finance heavy equipment, i.e., trucks, autos, cranes, kitchen equipment for like a restaurant. That's something we can do 100% financing for, so that's something that's helpful. But big things that we do are obviously commercial real estate secured loans here too. So
Okay.
wanted to throw that little tidbit out there and um,
Any
appreciate the time.
farms?
Pardon?
Agriculture? Any farm?
We can do farms. Yeah, we do have two agricultural lenders. We do lend for the USDA product as well.
Okay.
That's a little bit cheaper than the SBA product, but it does have to be in a rural community. So that's a great option for people who do live in those communities. So
Okay. So I gotta put that question out there since we're talking about USDA and farms and agriculture. Uh, what about any cannabis business owners that's looking to get into that medical marijuana cannabis business?
we do offer financing for medical marijuana and recreational marijuana in states where it's legal. I'm a big proponent. Definitely think more people should be considering it. But it's since it's not recognized on a federal level, there are certain protections that they are unfortunately are not afforded as business owners being insured by the FDIC. So we have private institutions who will fund loans for them. Generally, you're going to have a little bit larger of a down payment and a different structure with some shorter terms
Right.
that prompt refinancing every 5 to 10 years or so. But outside of that, we definitely can assist people in that community in that space. So.
Okay. Good deal. Sounds good, man. I think anybody's listening to this podcast or pull this out once it gets posted, I think they'll be better prepared, and I think it will go a lot smoother with the information that you've just provided. So I appreciate you taking your time out your afternoon, man, to jump on with me and give us some nuggets and some great information. I appreciate it.
Well, thanks for having me. Hope you guys have a good Memorial Day weekend.
You too, man. Be safe, and we'll talk to you next time on the next loan.
Alrighty, have a good one.
All right, you too. Bye.
Bye.